I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a...
Tom Lee discusses the post-election market rally, highlighting optimism driven by political clarity and favorable policy changes. He sees significant upside potential in small-cap stocks, which are trading at a discount and could outperform the broader market in the coming years. Lee also addresses concerns about rising bond yields, agreeing with the Fed's move toward a neutral interest rate, which he believes will support market growth. He predicts a 5 to 10% increase in the S&P 500 by the end of 2024. Lee is optimistic about Nvidia's future, despite overheating issues with its Blackwell chip. He believes the problem has been resolved and expects strong growth as Nvidia ramps up production, with substantial revenue in the coming quarters. Lee encourages investors to focus on Nvidia's long-term growth and the potential of its new products, particularly in 2024 and 2025.
You knew Trump was going to win.
Well,
not many people did.
Yes, that's...
I'll give you credit. Are you saying you didn't? Maybe you didn't say it in so many words, but you said it.
Yes, I'd say that we were placing a lot more weight on what the betting markets were pointing to, and so and we, when we look at all the deltas, that's...
And you saw it in the Trump trade,
yes.
And you saw it in Bitcoin.
Correct.
And you saw it in sectors of the market that would benefit from...
That's right.
Presumably, but who knows from a Trump presidency. So 1,500 points a meet out of the gate. More to come, or are we're already there? He'll never be deficit friendly, will he? I mean, he will be deficit friendly. He won't be, if we cut taxes on tips, Social Security, overtime, remove the SALT cap, extend the tax cuts. If you do all those things, that seems like
it's going to be very difficult to fix the deficit with just changes in taxes and spending. But it's probably why Bitcoin is kind of interesting here, because it's potentially a treasury reserve asset. And, if Bitcoin rises in price, it actually helps offset the liabilities, which is the deficit.
So you were at 150, I think, on Bitcoin, weren't you? But
yeah.
Not necessarily by the end of this year, or?
I think 6 figures is still possible before the end of the year, yeah.
And then more next year and the year after?
Yeah, I think because now, post-halving and now Bitcoin's becoming a lot more relevant, and I think maybe the regulatory overhang is diminishing, that there's a lot of upside from here, yes.
Okay, S&P, end of next year.
Well, between now and year-end, 5 to 10% is probably the base case, just because that's the type of rally post-election, and we have a dovish Fed and, the normal seasonals.
Is that the right move right now for the Fed?
I think inflation fighting war is largely over, and the real rate is still too high. So I agree with the Fed's view that we need to move towards neutral, which is towards 3%. So I think it is supportive of markets, and business investment has been constrained. So I think these things are positive.
So what about 2000, what's next year? Is that 25? They move so fast. They're like months now, the years. So what about 2025? So 5 to 10% more would put us well above.
Yeah, more than 6,000 before year end. I think at least for the foreseeable future.
No recession.
No recession, and
people want you to answer when I ask you a question. So what are you saying? 100 on the S&P?
I think well past like 6,700.
No,
sometime next year.
6,700.
Yeah, sometime next year, because
that's another 20%, isn't it?
Yeah, maybe 10, 15. Yeah, because margin debt hasn't really risen in the last 4 months, and the stock market's up. So we know investors haven't been adding risk. And now we have earnings visibility, and we have a continued dovish Fed, and then this election's behind us, so multiple tailwinds exist.
Oh, you're pretty bullish.
I think I'm pretty positive on the U.S. and fundamentals, yes.
Okay, good.
This report from the information that they're asking suppliers to change the server racks for Blackwell due to overheating, how much does it concern you?
It does not concern me very much at all. Look, NVIDIA went through this about 5 months ago. The thing with NVIDIA is NVIDIA is very quick to make changes, and this particular overheating issue with the Blackwell, that's already been played out, and the design was changed. So if we're talking about potentially a new overheating issue, we may be talking about Grace Blackwell, but I can tell you definitively that Jensen's not the kind of CEO that likes to make the same mistake twice. So I don't see this problem happening. Or if it is, it's probably not a meaningful issue because Jensen was able to come back, or NVIDIA was able to come back from the previous issue in less than 2 months.
But does it change the numbers if there has to be a delay? I mean, Jensen did tell CNBC, I don't know, a month or so ago that the demand for Blackwell was, quote, insane. So I don't think that's the problem, but the timing.
I don't think the timing changes at all. I think Blackwell is ready to go. I think Blackwell is fixed. And we maintain our tagline, you have to own NVIDIA into the Blackwell ramp. I mean, that's going to be the rosiest period of owning Blackwell is when Blackwell is ramping. So I maintain that we've had this overheating issue, particularly with Blackwell, and I think it's been addressed. I think we're expecting like tiny bit of volume to come through in the October quarter, and then substantial volume to come through in the January quarter. And that's the way we see it with NVIDIA.
Well, Harsh, we are going to get earnings fairly soon. So what are you looking for? And perhaps even more importantly, when we listen to the commentary around the earnings, what are going to be some of the key milestones that you're going to watch?
Yes. So historically, if we go back last 1.5 years, NVIDIA has been on this cadence of about $2 billion beat and $2 billion rise. So that literally the quarters are rising about $4 billion apiece. So for the October quarter, we're expecting slightly less than the $2 billion cadence. We're expecting about a $1.3 billion beat. And that's because it's simple. Blackwell isn't out yet. So the volume isn't there. When you get to the January quarter, Blackwell, we think will do somewhere around $6, $7, $8 billion of revenue. But you could potentially get two situations. You get extreme supply constraint. You could also get a pause in the H100 and the H200 complex, the older chips. Because, why would you want the older chip when the latest chips are available? So we're expecting, again, slightly less than $2 billion beat, but the numbers will keep rising. But when you get to April, it's a whole different ball game. Again, tagline, you have to own it when the ramp comes. Starting April, we see a massive ramp in Blackwell. We see the introduction of Grace Blackwell at the end of the April quarter, possibly the early July part of the quarter. And then you're off to significantly bigger beats than the 2 billion historical beats. So I would urge patience with all the volatility that we're seeing with the stock and focus on the ramp.
So what do you think that should be? 12 times? I mean, what's the opportunity set in your mind?
Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking about the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
I thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe a sweep the other way would have been a little more frightening to some.
Yeah. I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And So in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I mean, I kind of agree with the idea that there are animal spirits growing.
Tom Lee is optimistic about the market, expecting a 5 to 10% rise in the S&P 500 by the end of 2024 due to clearer policies and a neutral Fed stance. He also sees strong growth potential in undervalued small-cap stocks despite concerns over bond yield. For Nvidia, Lee believes recent overheating issues with the Blackwell chip have been resolved. He anticipates significant revenue growth as production ramps up and advises patience, with substantial gains expected in 2024 and 2025. Do you share Tom Lee's positive outlook for small-cap stocks and the broader market? How confident are you in Nvidia's ability to overcome its challenges and drive growth?